Hey guys, welcome back to the channel. I just want to start by thanking all of you for supporting me and subscribing to my channel. It has honestly been such an amazing experience making videos and this kind of content for you guys. After 4 months of hard work, we have finally reached 1,000 subscribers. I want to thank you all so much for all of your support. You have no idea how much this means to me. And to return the favor to you guys, I'm making this video covering one of the most requested topics, the breakdown of my entire real estate portfolio. In today's video, we are going to discuss every single one of my properties, how much I purchased them for, the cash flow situation, the reasoning behind each purchase, and how much they are worth now. And most importantly, the headaches and stresses that come with being a real estate investor. Guys, this is going to be a very interesting video. We are not going to talk about just the good properties, but also the bad ones and everything in between, from dealing with squatters in my investment properties and the headaches and stresses of dealing with a council as a first-time developer. So make sure you guys watch this video to the very end. I'm sure you guys will get plenty of value out of it. Just a quick disclaimer before I start the video, guys. This is only my personal opinion and definitely not financial advice. I am not a financial advisor. I'm simply sharing with you the strategies that I've used to achieve my goals. And you should always do your own research and due diligence, and I will strongly encourage you to consult with a professional or financial advisor before making any big financial decisions. And without further ado, let's get straight into it. Guys, I know you want to listen to the juicy stuff and hear about how I've made 60% gain on a property over just a few short years. However, I think it is very important for me to first talk about my mistakes and the setbacks that I've encountered along the way. And by talking about these mistakes and setbacks that I've had, hopefully you can avoid these on your real estate journey. Let's start with the worst property in my portfolio. If you guys seen any of my previous videos, you will know that I absolutely hate apartments. So let me show you why. So this is the apartment that I purchased back in 2016 for $220,000. It is in the heart of the Melbourne CBD, right next to Melbourne Central, so it is in a prime location. And after spending $10,000 to renovate this property, I was able to find a tenant for $420 per week, giving us a rental return of around 10%. It sounds pretty damn good, doesn't it? However, it is now time for the bad news. After holding this property for almost 5 years, I have not seen a single cent of capital growth. And if I was to sell it into the current market, I will most likely lose money. And the 10% rental return that I told you guys about, it's actually around 5 to 6% after I deduct the very high and very expensive body corporate fees. And with everything that is happening in Melbourne right now, with our borders closed and the massive oversupply of new apartments flooding the market, my rental expectation has actually gone down to $300 per week. But even then, I'm still expecting vacancies of up to 3 months in between tenants. This is definitely a property that I'm looking to sell in 2021, so I can spend the money on something that is much more productive. As we can see here, the rental return of 7% is not too bad on paper. However, if we take into consideration the fact that we have to pay massive body corporate fees every single year, and the fact that the apartment is not seeing any capital growth and is unlikely to see any growth at all in the coming years, it makes this a very bad investment. Now, let's move on to the second property. This one is very interesting, because this one is currently untenanted. It is a massive drag on my cash flow and my entire portfolio, meaning my other properties have to work extra hard to generate enough cash flow to support this property. However, the good news is that I'm currently in the process of getting building permits to extensively renovate the existing property and building a brand new 3-bedroom townhouse in the back. And once all of this is finished, I should see a rental return of around $800 to $850 per week. This property is also located in Melbourne, in the western suburbs, about 10 kilometers away from the city. I purchased this property in 2019 for $750,000 because of the massive land size that comes with the property. This allows me to subdivide it and build something in the back. However, the condition of this property is horrible. So bad that we can't even find a tenant for it. And that's why it's been sitting vacant for the last 2 years. And due to everything that has happened in 2020, the process of getting the permits and getting the right paperwork to start building has been very stressful and lengthy, to say the very least. And this is not even the worst part. When I went to inspect this property about a few months ago, I actually found someone squatting in my property. They smashed the front window and broken in and pretty much decided to move in. The police were called and eventually the squatters left without a fight. However, I was still left with a massive cleanup bill, and words can't describe how stressful and traumatizing this whole experience was for a first-time developer like myself. Despite all the bad luck I've had with this property, I still have faith in its potential. And I think once I finish all the renovations and building something in the back, this property is going to do really well for me. However, as of right now, this property sits vacant and I definitely still have a ton of work to do. There are definitely lessons to be learned here, and I will definitely be more efficient with my next development. Everyone has to start somewhere, and I'm very glad that I made a start right now. And I'm starting to build my knowledge as a developer, so I become more successful at doing these kind of projects in the years to come. Now let's move on and talk about properties that are actually doing well for me. Property number 3 is located in Bendigo, Victoria, and this property has been doing pretty damn well for me. This is a property I purchased in 2017 for $230,000. It is a 3-bedroom, 1-bathroom, freestanding house about 5 minutes away from Bendigo CBD. I purchased it in 2017 because of the strong rental returns, as well as the fact that the government was spending a lot of money improving Bendigo as a regional hub. 3 years after my purchase, the property currently rents out for $280 per week, which is equivalent to a 6.3 rental return. Not too bad for a property that hasn't seen any vacancies in the last 3 years of ownership. After looking at recent sales, I believe this property is worth around $260,000 to $280,000, which I think is a very conservative estimate. Based on its current value and my initial deposit of 20%, it gives me a LVR of around 64%. I believe the value of this property is going to do very well for me in the near future. The level of activity I'm seeing in the Bendigo market is very promising. And now onto property number 4. This one is also in Bendigo, but a bit further out in the more affordable areas, which is around 10 minutes from Bendigo CBD. This property was purchased in 2018 when it was still a buyer's market, and I was able to negotiate the price down from $230,000 to $210,000. Now, this property is one of my personal favorites because it just has so much potential. Currently, it is only a 3-bedroom, 1-bathroom, old weatherboard house. However, this property is on a block of more than 1,000 square meters, and it is around the corner for my local shopping district, giving me really good redevelopment potential when I decide to redevelop it. But currently, it is producing a rental income of $260 per week, giving me a rental return of around 6.4%. And based on the recent sales and the estimate on CBA and realestate.com, it is currently worth around $275,000. This brings my LVR down to around 58%, giving me plenty of room to take out equity for my future purchases. Alright guys, I know you're probably sick of hearing about my properties in Victoria, and you want to get some ideas for investment hotspots interstate. So let's move on to property number 5, which is based in Launceston, Tasmania. I first started looking at Launceston in late 2017. At the time, Hobart was going absolutely crazy and the market was becoming very competitive. And after securing a few properties in Hobart, I realized that the market had become too hot for me to secure a good deal. That's when I began to look towards Launceston, which was very similar to Hobart, but was still a buyer's market. And just to give you an idea of how competitive the Hobart property market was at the time, each agent that listed a property would receive multiple offers within the first 24 hours, and each inspection that I went to, I saw dozens of groups of people comprising of both investors and first home buyers. The competition there was just absolutely crazy. Now, I know what some of you guys are asking. Why am I looking at Tasmania in the first place? Well, Tasmania has some very strong fundamentals. The market itself has some very serious housing shortages. There was simply just not enough property to house all the people looking to purchase and rent. And this led to a few different things. First of all, the rental return was very impressive. And second of all, the vacancy rates was pretty much near zero. With such a shortage of properties, each landlord were getting multiple applications from good quality tenants for each property that they listed. And whenever there's such a shortage of supply of properties in a particular market, you are expected to see massive amounts of capital growth. And that's exactly what we saw from 2017 to 2019. Now let's take a look at the numbers behind this property. This will give you a much better understanding and indication of why I decided to invest in this particular market. After doing extensive research into this particular market, I chose an area that I believed would give me very good long-term capital growth and at the same time give me good quality tenants. I ended up purchasing a 3-bedroom, 1-bathroom, freestanding house on a block of around 340 square meters. The land size on this property is very small. However, the price of this property more than made up for it. After some negotiations and the previous purchaser's contract falling over, I was able to secure this property for only $193,000. It is crazy to think that you can purchase anything within 10 minutes of the city for this price. However, this is what a buyer's market can do for you. When there are more sellers than buyers, the sellers become desperate as their properties stay on the market for longer and longer. And that's when you can come in and offer very low prices and still get it accepted. This property currently rents out for $265 per week, which gives us a rental return of 7.1%. Based on its current value of $235,000, it has grown by more than 25% in just over 2 years, giving me an LVR of around 60%. I know I've been telling you guys about the LVR for each property. It simply means the loan to value ratio. And I know a lot of you guys probably don't care about the LVR, but it is very important to property investing. And I'll tell you exactly why at the end of the video. Now let's keep moving and talk about property number 5. I have this weird strategy where I always buy properties in twos. This allows me to negotiate the management fees with my property manager and the legal fees with my conveyancer, and it also saves me from traveling back and forth too many times. So property number 5 is another property in Launceston, about 10 minutes to the northwest, right along the river. And this is another property that I absolutely love. First of all, the location of this property is beautiful. It is right next to prime waterfront real estate, which are in the 500, 600 or even 700,000 price brackets. And the best thing about this property is that it is set on a block of more than 1,000 square meters, allowing me to develop it in the future. The numbers behind this property is also very impressive. After some negotiations with the property owner, I was able to secure it for $240,000. It currently rents out for $310 per week, giving us a rental return of 6.7%. The current value of this property is around $360,000, giving us a massive 50% growth in just over 2 years, and an LVR position of around 50%. A very important lesson that I learned from this property is the importance of land. A house on a big block of land will give you future development potential, and this in turn is going to attract developers who are willing to pay a premium for your property. This is going to help your investment grow much faster. So if you have to choose between a nice house on a small block of land or a crappy house on a massive block of land, always choose a house on a massive block of land, because in 30 to 40 years time, that nice house is not going to be so nice anymore. However, if you got a big block of land, you can then build 2, 3 or even 4 even nicer houses, and that is going to make you so much more money than the first property. Now let's talk about Hobart. There is without a doubt that Hobart has seen some very impressive growth in the last few years. In fact, Hobart was Australia's best performing property market from 2017 to 2019. With what we have seen in Hobart in the last few years, many will suggest that it is now becoming a bit overpriced, and I will not disagree with them. However, for those who got into Hobart at the right time, their investment will have done wonders for their portfolio. Personally, I was a bit late to the Hobart property market. However, I was lucky enough to secure a few properties before the market went absolutely insane in late 2017. So property number 7 is yet another 3-bedroom, 1-bathroom, freestanding house about 10 minutes to the north of Hobart. This is definitely one of my better performing properties, so let's take a look at the numbers behind this purchase. This property was purchased for $310,000 in mid-2017. Which was when the market was just starting to really heat up. Despite the level of activity in the market, the property was overlooked by many due to the poor color choices inside of the property. However, the property was actually a very nice property. All it really needed was a fresh coat of paint and some new carpets, which I was able to do for less than $10,000. And after I completed the small renovation, I was able to increase the rent to $420 per week. I know that a lot of you guys want properties that you can move in or find tenants for right away. But if this property has taught me anything, it would be that getting your hands dirty with a small renovation or a simple coat of paint is going to increase your rent and value by multiples of the cost to complete the works. And the fact that most people are scared of doing that little bit of work gives you a massive advantage and allows you to secure these properties at a lower price. The current rent of $420 per week gives us a rental return of 6.8%, which is more than enough to cover the repayments and outgoings and leave us with a surplus at the end of each month, which I will be putting towards my next deposit and other investments. Based on the current valuation of $422,000, the property has seen a growth of around 32% over 3 years, which is not as impressive as cryptocurrency or Afterpay, but it is a steady growth that has outperformed most of Australia's major markets, including Melbourne and Sydney. Alright guys, I know this has been a very long video. I want to thank you for tuning in and staying with me for this long. It is now time to talk about my last and favorite investment property. This isn't my favorite property because it's made me the most money. It is actually the first property that really ignited the spark in me to make me want to become a real estate investor and build a multi-million-dollar portfolio. It was also the first time that I traveled interstate to look at a property, and it was also the first time that I realized that I could find better deals outside of Melbourne. Upon arriving in Hobart in 2017, I realized just how competitive this market was. And to be honest, I struggled to find anything that was within my price range of $350,000 until I found a seller selling his property on buymyplace.com. After some negotiations, we were able to agree on $320,000, which was an absolute bargain considering how much other properties and similar properties were selling for. The vendor was extremely happy that he was able to sell his property without the help and cost of hiring an agent. And I was happy because I secured such a good deal, so it was definitely a win-win for the both of us. The numbers behind the purchase were also very promising, with the property being purchased for under market value and the rent at $400 per week, giving me a rental return of 6.5%. After 4 years of ownership, I have had the same tenant who moved in on the same day I settled the property, and the property has since appreciated to $500,000, achieving a capital growth of 56% in 4 years' time. This makes this property my most profitable investment property, and this was when I first fell in love with real estate. Guys, we are almost at the end of the video. I just want to share with you guys a few more learning experiences before we conclude the video. Throughout the whole video, I have been talking about LVR, which is short for loan to value ratio. So why is this so important? Well, your LVR position determines if you are able to take out equity from your portfolio. What a lot of experienced investors do is take out equity that they've built up and use that as a deposit for their next purchase. For example, my investment property number 8 currently has an LVR of 48%. Most banks are comfortable with their customers taking out equity as long as it doesn't lead to an LVR going above 80%. So this means I can now take out 32% of $500,000 and use that as a deposit for another property, because even after I take out this 31%, my LVR on this particular property will still be below 80%. The reason why I do this is so that I don't have to use my own money to fund the deposit, but instead use it for other investments to diversify and grow my portfolio faster. I know this can be a bit confusing, so I'll make another video going into detail about exactly how all of this works and how you can get into your second investment property for only a few $1,000s. So make sure you subscribe to the channel and turn on the bell icon so you're notified when the video is released. As you can see, I've made plenty of mistakes along the way, and my path from my first investment property to my 8th investment property was definitely not all smooth sailing. If I could tell my younger self one thing, that would be to acquire more knowledge, do more research, and seek professional help or help from those who have done what I'm trying to achieve. Even after 10 years in the real estate game, I still have so much to learn, and I'm still learning every single day so I can make better investment decisions and produce better content for you guys. So my final tip for you guys is to not rush into buying a property. Spend the time researching, seeking help, and networking with like-minded people so your investment journey can be smoother and more efficient than mine. Alright guys, I know that was a lot of information. I hope you guys were able to digest all of that. However, if you're looking for more real estate content and tips, feel free to follow me on Instagram at investwithzane. This brings us to the end of the video. Don't forget to subscribe to the channel and hit that like button, and I will see all of you guys in the next video.